Welcome to the Digital Agency Growth Podcast. I'm your host, Dan Englander.
Eric, thanks for coming on the show.
Yeah, thank you for having me.
Yeah, so I think we've spoken in the past, and Hawk's been on my radar for a long time, based on your meteoric growth, and also had a chance to finally check out the Hawk method, which is awesome. And it's based on, I think you did a really good job summarizing some very big concepts, the awareness, nurturing, and trust tripod and everything. Before we get into that, for those that don't know you, can you go over 50,000 foot view of your background and so on?
Yeah, basic background. So graduated in 2008, went into real estate 1 week before Lehman Brothers collapsed, made $350 that year living in LA, which is not enough to pay rent. So went into a good amount of debt, started scrambling, tried to figure out what to do, ended up launching what I'd say is an early version of like masterclass for the music business for musicians. It was basically teaching business, how to do business as a musician and independent artist. Got some amazing record execs and big wigs in the industry to be behind it. Built it for 2 years, got it to profitability, realized it was never going to be that big. So hired a CEO to take it over. And then after that, consecutively started 2 subscription e-com companies in 2010 and 2012 and sold them. After selling the second one, started advising and consulting other companies on how they could grow their revenue using marketing, and worked with big brands like Red Bull, Verizon, HP, a lot of startups as well, and just saw that the marketing ecosystem still to this day is just completely broken. Like there's no certification, there's no responsibility that you actually have to be able to do what you do. Like there's no accreditation, et cetera. It's just, you can basically put up a website and say, I run an agency, and voila, you run an agency. And so for brands, it's really, really, really hard to find good marketers. And so the few that are good tend to get really expensive, want long contracts, high minimums, et cetera. And I just got sick of the whole ecosystem and decided that I wanted to create something that we were the best at what we did in marketing, but we were easy to work with, nimble, flexible, et cetera. And so I built a little SWAT team with 7 people originally, called it Hawk Media. And it was, a Facebook marketer, an email marketer, web designer, fractional CMO, et cetera. And fast forward, it's been 8.5 years. We're about 300 people, manage marketing for about 600 brands. We have a second venture fund that we've raised 25 of 50 million for. We have a financing arm where we do debt financing for our clients so that when they need working capital, we can provide it. We're going to be launching our tool and software soon for brands and agencies around benchmarking and basically marketing AI that we've been wanting to build for 7 years. And finally are at the sort of first finish line, so to speak. Yeah, that's it in a nutshell.
Yeah, that's awesome. And congrats on the growth and everything. And to zoom backward a little bit. So, you're coming out of some different startup enterprises. Before that, the corporate world sounds like a little bit. How did you go about things in the early days? Like, how did you decide the clients that you wanted to focus on in the beginning? And to frame that out a little, I think we hear a lot about niching. We hear a lot about that. We hear a lot about going up market. And one thing that's really interesting is you've sort of branded Hawk on being marketing for almost anyone, or marketing for small businesses as well. So I'd love to hear just like how that decision was made and how it's progressed and everything.
Yeah. So how we originally started was just, what did I think I could serve? It was a lot of e-commerce. I built and sold 2 e-commerce companies. I basically was the aspiration to a lot of our clients and was like, yeah, I know how to do this. Like, let me help you do it. And it was that simple. And I think a lot of people that get into the agency business forget that like you're selling yourself as, you're almost doing your clients a disservice if you're not one of the best people in the market. Like if you aren't going to serve them better than everyone else, then you shouldn't be doing it. If by hiring you, they're hurting themselves, that's a bad thing. So at the time when I started in 2013, 14, there weren't other people that have built and sold these companies that were then offering to help other people do it. So I felt very confident in helping these e-com companies. And then from there, we'd get someone that would call us that was maybe a little outside of e-commerce, financial services or something. And I'd be like, well, this is what we do. This is how we do it. Let's see if that can apply to, and I was always transparent. I was like, I think it'll apply to your business too. Let's try it. And then it did. And then we built case studies around that, and voila, now we have a new vertical. And so instead of niching down, we actually were just like, accessibility is in our mission statement. It's accessibility to great marketing. So we wanted to always be accessible and easy to work with. And so we didn't put up barriers of like, oh, we don't do that work. I always thought the pretentiousness of like, we don't work with those kind of companies, or we're going to pick our clients. I wasn't with that. It works for other brands, just to be clear. The going up market thing works really well for most agencies. It's kind of it's the playbook. But for me, I was like, well, I want to do things differently. It was a bit of principle and a bit of if I can do this, there's a massive market there for me. If I can serve small and medium businesses and not go up market, we do serve up market too. We work with some of the biggest brands in the world. We've worked with Nike, with Unilever, with Estee Lauder, with Red Bull, Verizon. Like, we've worked with big brands and we still do, but we also work with a ton of up and comers. And I was like, if I can build a business that actually can be profitable around this, the addressable market is insane. And my competition are 5 and 10 person full of shit agencies, frankly. And so can I build a credibility engine that I can get all that business and I can service it profitably and build a sustainable business around it? That sounded compelling to me. It's hard. It's a hard business, but we figured out a way to build that. And, fast forward, it's worked. So
Totally. And can you talk about that a little bit more? Like, how were you able to make that work? Because we hear so much about how expensive it is to acquire customers and how like the niching makes all that helpful and the usual playbook and on and on. Yeah, I'd love to hear just kind of like what channels did you focus on in those early days and how did those look now versus then?
It's drinking our own punch. We do a ton of sales and marketing and believe in marketing. Like, most agencies don't. Most agencies, they sell marketing to other people, but don't do it themselves. And so we found efficient ways to market ourselves and grow ourselves and built an engine around it and built an incredible sales team and an incredible marketing team ourselves and a partnerships team that crushes it. And so our revenue generation is huge. And so that allows us to deal with the volatility of the ebb and flow of month to month contracts with clients. On the other side is our retention of clients is pretty similar to any other agency, contract or not, because it turns out, regardless of what it says on a piece of paper, most of these agencies sign annual contracts, but still have a 30-day out. So we just don't have the annual piece. We have the 30-day out. So it's like our retention is pretty similar, but we have no barrier to entry. And so that's been a really helpful part of growing, along with, again, figuring out how to market ourselves, how to brand ourselves. And above all, like, this goes for everything we market, including our clients, but ourselves, you got to have a good product or service. Because we have something that it's not expensive to acquire customers if those customers stick around forever. Like, it's expensive if you churn through them. And again, I see the biggest issue in our industry is a lot of marketers don't actually know what the fuck they're doing. And so they sell all these marketing services, they lose their clients after 3 months, and they wonder why it's so hard for them to keep their business afloat. It's like, because you don't have a good service.
Yeah, you touched on so many interesting things there. And one of them is the idea of the contract and the retention and all that stuff. I guess one question is like, we've seen our clients, we've done this ourselves, have experimented with all sorts of different contract lengths and the minimum amount of time, the 30-day and all that stuff. One challenge that I've seen is that if you don't have, the contract say it's a certain length, then people in their heads are thinking, well, I don't have to give this the right amount of time. I can wake up on the wrong side of the bed next month. So how do you deal with that? How do you keep people long-term?
So first off, that's the downside for sure. Like, the wrong side of the bed, the panic, the one bad week and everything, like 2 years of work goes out the window, that kind of thing definitely happens. Part of it is communication strategy. You just got to be good at communicating and getting people to look at it the right way. Part of it is you deal with it. And that's where the trade-off, all business is about CAC to LTV. What is your cost to acquire a customer and what is your lifetime value? If we lose a little lifetime value on average of a customer because we deal with that kind of volatility, but we also make up for it in CAC because we have no barrier to entry, so people are comfortable signing, it pencils out. The ratio is what matters. So that's part of it too. And then, we're always doing things like, my view was, I thought a contract artificially fixes a problem versus let's actually fix the problem. Let's actually do better at communicating and informing our clients. You talked before this about the book we came out with. Like, part of the motivation of this is we now speak the same language as our clients. So we can show them like, hey, read this book. This is what we're doing. So now you understand what we're doing. So when you're not going to panic because you had a week of bad performance. That's ridiculous. Or you wake up on the wrong side of the bed and you're pissed off. Like, don't run emotionally. And again, we will deal with those, but they're on such a small percentage that it's okay.
Yeah, that's really interesting. And I think that there's like two sides of the emotional coin. There's the client emotions, but there's also your own. Right. And that's something that I've run into where it's like, I can know rationally that it's a ratio and that there's a certain number of people that are churn and all this stuff. Yep. But then like living through it with a relatively few clients with the typical agency model, the smaller team is way harder. And it sounds like maybe you've steeled yourself against that because you have way more clients and more clients coming in all the time. And it's not to say that it's just that it's churn and burn or anything like that. You're obviously retaining them too, but
But in that, listen, it's averages. Like at scale, the averages play out, but it's at a even a smaller agency over time, the averages should play out. And what I've seen is the averages are about the same. So we just know that there's a consistency there. Now that means if you're going to run a business like mine, you have to replace business every month. Like that is part of it. Like we have project work that comes in for 1 month at a time. We build a website, it's done. That revenue's gone. So if you want to keep your revenue where it's at and keep growing, you have to grow sales. And so that is part of it. Is it's literally a game of churn, minimizing churn and maximizing sales is how you grow these businesses.
For sure. And this might be a tougher question. I'm not sure if you have all the data in front of you or anything, but it's interesting you say like over time the averages are kind of the same, in the agency space. Can you dig into that a little bit more? Because on one hand, we all know that there's so much work we have to do really great work and keep clients and improve the service. But on the other hand, it sounds like, and I believe you, that averages are kind of the same. So what goes into that?
Per agency. I don't mean,
per agency.
I think different agencies have different averages, honestly. And like if you, like there's agencies that require 3-year contracts, they're probably going to have a 3-year retention or more. But our model, what I'm saying is my averages played out. So what you were saying about like the volatility, it's like, but I can kind of assume at the beginning of the month what I'm going to churn. That ebbs and flows a little bit, let's say 20%, but you're talking about 20% of the churn number, not 20% of my revenue. So like that churn, like God forbid we lose an extra point or two in business. We just need to make sure we're also making up for it on the sales side. Like that's the balance that you're dealing with, which is most businesses.
Yeah, that makes a lot of sense. And it sounds like you've also been able to get a really good grasp on your numbers by having enough new business channels to bring that in and to keep it handle and all that. And as part of this, I know that it sounds like the book was a little more, it was client facing, as it should be, but I loved I still had a lot of good takeaways, for any agency that's out there, including ours, even though we're not quite an agency. And one of the concepts that I really liked is this idea of a drive-by pitch, or like really condensing the elevator pitch into something much smaller. Yours is Outsourced CMO. And it's funny because it sounds like you guys kind of invented that. And then since then I've heard that phrase in different contexts. People have probably stolen it which is a sign that it was good. So I'd love to hear like kind of bringing that into your broader view of a brand. Like, is that something you need to evolve now that you hear Outsourced CMO all the time? Or like, what are your thoughts on that at this point?
No, it did evolve to Outsourced CMO and marketing team because a lot of people assumed all we did was fractional CMO like consulting work. Yeah. So, but that's what I say is we're your Outsourced CMO and marketing team.
Yeah, that makes sense.
And you're in the industry, so you've heard it a lot, but it's like one of those things, like we know we barely scratched the surface on the addressable market that there's a lot of time before that's saturated in any way. Sorry. And other people using it's kind of nice because if we can own it, but other people proliferate the term, great, because we do own the trademark.
Right. And I think you actually kind of hit on like a meta observation, which is that like we have our own head trash being in this space that isn't necessarily our clients. So I think that's really
I even good. Said my team constantly like, we need to change our pitch, like it's, it's old. I'm like, it's old to you. No, everyone else has heard it for the first time when you make that phone call. Like, don't worry about it. It's working.
Yeah, totally. And one thing that I'm up against now, and I know lots of our clients are, it's one of like the biggest topics that we deal with is hiring and training salespeople. Hiring in general is a pain right now for a lot of reasons. I'd love to hear your experience with it, from when you got yourself out of the sales seat till now, if you don't mind.
Yeah, I mean,
about that. Yeah,
it's funny. I had a talk with one of our top salespeople today, and he's bitching. He's doing great, but he's bitching like the work ethic out there right now is a lot worse. Like I'm seeing it across the board. I'm seeing it not just in my own business. I'm seeing it with almost every service business I work with, whether it's airlines or going to a restaurant. Like I think people are just, and I hear this. I mean, there was a Gallup poll that came out that like 2021 was the most depressed year in the history of the United States on record. Like, I think people are burned. I think that COVID for 2 years, people kind of muscled through it, but now the free money dried up, inflation hit, we're in a recession after you've kind of muscled through this emotional roller coaster of COVID, which like, I don't know that any of us not any of us, a lot of us consciously were emotional about it. I was one of the people that was like, nah, I'm fine. I'm having a great time. But I think somewhere that hits you. And so I think we're dealing with a time right now that salespeople that have to be self-motivated and grinders don't know why they're grinding and are having a tough time in general. How we built it out, I would say that like, thank God we built our sales culture when we were all in office. So when we got out of the office, retaining that has been a little harder, but it's not like trying to create it from scratch because creating a sales culture and remotely is incredibly difficult. And so trying to figure that out, trying to figure out how to manage salespeople and get them doing we started to micromanage them with activity, but that didn't really work because different people need different levels of activity to close because they have different metrics. So like we want to manage to outcomes, but then the people that aren't self-motivated end up falling through the cracks. So it's like, but those are the people you want out anyways. So it's like, it's a kind of a moving target right now. That being said, we generate a slow month for us is getting like 45 new clients. So we get between like 45 and 80 a month. It's working. But we're at the point now where it's like, okay, we've been consistent. Now we need to scale again.
Yeah, totally. So thinking about that a little bit, I think when we talk to agencies, the biggest mistakes they make hiring salespeople is they hire the closer too early before they have some mechanism for bringing demand into the agency or any repeatable processes. That's one. The mistake I've made is not incentivizing people well enough, like hiring somebody too junior for sophisticated enough offer. I've made that one. And then there's others that I've made, just related to hiring the wrong person, even though like everything checked out, even though we felt like we checked all the boxes, we did the references, we did all the stuff. So I'd love to hear your thoughts. Like, are there mistakes that you made in the early days of hiring for sales that you wouldn't make now? And just love to hear your experience.
Kind of what you said, like expecting a salesperson to generate their own business, close their own business, build their own biz dev and partnerships, and be all the things that a founder can be. And on the sales side, didn't really work. And you end up bifurcating. And as you grow a business, you bifurcate, you split up the job more and more and more. So it started with a couple salespeople that I expected to do everything. That didn't work that well. Then I became the lead generation and expected them to close. That worked pretty well. But then we needed to scale that. So then I started I brought in a partnership person to start helping with our sort of co-selling with other partners and stuff. That started to work. Then I brought in marketing help to start helping with lead gen, aside from just the leads I was generating. That started to feed our salespeople more and how to scale that. And then we brought in outbound sellers like cold callers, cold emailing, like that kind of thing to start to fill the coffers. So then we had partnerships, marketing, and outbound. And so then my own network selling like still exists, but we were able to scale past that. But that took years. And it really was like 3.5 years in, I was still doing 85% of our revenue personally. And then I went, this isn't scalable. I got to start giving this all to someone else. And that's when, my close rate is almost double what our average seller's close rate is. So we lost, let's say, half the new business by me stepping out, but it was the only way to step forward too. So I tried to train them and help them with it. But then literally it was summer of 2017. I went, all right, I'm stepping out of closing deals. It's going to them now.
Yeah. And it's funny because I'm in a similar juncture with hiring a salesperson. And my guess is you also bought your time back. So you opened up all this new time. So what did you do with that time? If you remember?
It's evolved to it was more networking, more getting out on the road, more generating leads versus closing them. So I didn't have to I was at that year, we do a bunch of work in Europe too. And I was in Cannes at this marketing conference, trying to close a deal for my hotel room while I should be out networking with some of the biggest people in marketing. And I was like, I don't need to be doing this. So now, fast forward years, 5 years later, I can go, I just got back from a month in Europe, going around to different conferences, getting leads, getting people, following up on email, and then being like, hey, here's our director of growth to jump in and help with what your needs are. So I'm just drumming it up. So about a third of my time is spent doing that, beating the drum, waving the flag, being on podcasts, getting our name out there, handling emails. About a third of my time strategic with our exec team on what they're all working on. And about a third of my time is on the growth of the business, like M&A and expansion, our fund, our software arm, all those kind of things.
Can you talk about the fund a little bit and just kind of how you decided to take that on?
Yeah, it started with angel investing. Our first investment was a company called FabFitFun. My buddies were pivoting their media company to be an e-commerce brand and basically demanded that I invest because they wanted me on their cap table. And I fought them. I was like, I'm not going to invest in startups. And they're like, just do it. So I gave them a small amount of money. That company ended up being worth somewhere between $3 and $5 billion 7 years later. But it grew really fast. So I went, oh, maybe I should do more of this. So I started investing in these startups. And after 3 or 4 years of doing it, I brought in someone to help manage it. And it turned out that our on-paper returns were about 11x. So it was huge returns. And it was maybe we should he's like, we should ramp this up. I'm like, yeah, but I don't have any more money to ramp this up. I can only spend so much of my own money. So we decided to raise a first fund. We raised a $5 million fund with the thesis of investing in the tools we use, MarTech, Ecom Tech, as well as sometimes consumer and some deals that we get into. That did really well. 3 years later, that fund is about 3 to 4x, I believe, and still going. And then we decided to raise, that was our proof of concept. So then we raised a much bigger fund, and we've raised 25 of 50 million, all focused on MarTech, Ecom Tech. Yeah. But we're investors in Klaviyo, Postscript, Enquire Labs, Instramatic. We were in Yaguara till they sold the company. We're in Cord. We're in a bunch of really prominent ecom and marketing tech.
Yeah, and it's a pretty. I mean, it sounds like that's a little bit detached from the agency, but it's like a pretty, or it's maybe not. Like how are those things integrated? If at all?
So we have a bunch of investors in the fund. We have no investors in Hawk Media, so it's just my partner and I, we're both partners on the fund too. So Hawk Media becomes a platform for the fund as well, where if we invest in a marketing software, that we invest because we believe it's a good tool for our clients. We then onboard a ton of clients onto these softwares, and we become a market maker for our investments. That's part of the thesis. So that partnerships team, that part of it is a big part.
Right. And that's really cool. And I think on the other side of it, how often, do you sort of make the pitch where it's like, hey, if we really want to align our long-term incentives, it's better that we take equity for working for you as opposed to money. Like I've seen those models.
I agree that it aligns incentives, but the problem is most people wanting to do that deal don't have the resources to build their company. They're like, the founder should value their equity more than just giving it to me, their agency. That's part of the problem. And once in a while, if I have a relationship with the founder and we've known each other, or there's some like nuance that it like makes sense, once in a while, it does make sense. Most of the time, if they're out of the blue, we don't know them, we don't have mutual connections, we're not friends, and they're just like, can we, get a discount for equity? It's someone that doesn't have a lot of ambition in their own company. And so for us, it's usually a self-fulfilling prophecy of that equity is worth nothing.
Right. If you're given it without asking for it, it's probably a red flag, right?
Yeah. So early on, we did a lot of them, and it was worth. We had one exit that was okay, and like kind of paid for the rest, but it was still like not. That was part of when we made a decision to start the fund. Was the checks we were writing were performing really well. The sweat equity was not, and the guy we brought in to manage both stopped doing the sweat equity stuff. Like it's a waste of time. So.
Yeah, and I think kind of like partially or tangentially related is you have an interesting argument in your book, but why do you think the first mover advantage is a fallacy?
I just haven't seen that many cases where it has happened. The first mover in social media was Friendster. The first mover, it's like, it does exist. Don't get me wrong, like if once in a while, but the idea to think that like usually you're better off learning from the mistakes of your predecessors to build a better version, not be the first person in that industry, in any industry. Like I've just seen it over and over again. It's anecdotal. It's not like I ran a study around this, but I just consistently see we're the first ever XYZ. Well, they're not around very long because they hit every pitfall that you will. And then the next person goes, oh, it's not doing any of those things.
Right. There's a lot of that. Yeah. The ship going through the iceberg or clearing out the ice kind of dynamic. Yeah. So that makes sense. Getting towards the end of our time, Eric, I just love one question that I've been asking lately with everything going on is like, what are you optimistic about?
I like it. I'm optimistic. So this is a strange optimism. I do think we're obviously going into a recession. I think that's hard to argue against, but I've done a lot of studying around this, and like the worst recession other than the Great Depression was 2008. And like the pit of that lasted a year. And I think we're getting close to the pit here. So like, I think like, as long as if you're an operator, you got to make it through a tough year and a half. Like, that's not that bad. Like, that's my optimism right now is like, just buckle down, build your business. You'll be fine. Also, unless you're a mid 8-figure, 9-figure, 10-figure company, worrying about the economy and the way it affects your business is you're high. It doesn't matter. There's plenty of niches to get into. If you're $1 million, $5 million business, $10 million business, the economy shouldn't be affecting the nature of your business right now. Like I think a lot of people use an excuse to give up. And so my optimism is that this pain doesn't ever last that long. People crave growth. And so the moment we see we're at some sort of bottom, actually I haven't even looked at the market today, but the moment we see we're at some sort of like reasonable bottom, that it's not continuing to dive, yeah, it's up 1.5% today. Bitcoin's up 2%. But the point is like, once it starts hovering and you start to see some growth again, which I think will come, I think rates are going to hurt, and they'll keep ratcheting those up, and that naturally will shrink the economy a little bit. But once that kind of slows down and people get their head around it, I think we'll be great. And I think some of the biggest companies in the world came out of 2008. Airbnb, like this is a time to shore up what matters in your business. It makes you focus on the things that are proper. And like my optimism tells me this is going to be a slow year for my business. We'll still grow, which is great, but it's just not going to be like this banner year that's going to be blow out of the water. But it's going to force us to, it already has forced us to like cut things that are wastes of money, focus on the things that matter in the business, get really focused on managing the business well. And so when things open up and things start to ramp up again, we're going to dominate. And that's how we're looking at this, is like, this is a push in the right direction to make our business really sound so that when the sun is shining again, we can really make some hay.
Yeah, I think that's a really healthy way to think about it. And let's hope. That makes a lot of sense, though. Erik, how can people follow what you're up to, get in touch, all that good stuff?
Yeah, all social channels at or / Erik Huberman. Super easy.
Awesome. And we'll get the book linked up as well. And I appreciate you joining us.
Yeah, thanks for having me.